It's been a while since we talked about View, a smart glass company which merged with the SPAC CFII. Now it has been trading lower and lower. It's already around $6 per share, way below the $10 per share, which was the net asset value when it was still trading as a SPAC. But now in this video, we're going to talk about View a little bit more, to talk about their fundamental analysis, financial analysis, and of course some technical analysis. So let's do it. First, some very small fundamental analysis, because if we look at the website of View right now, we can see that View is having more and more projects at this very moment, not only in the United States, but also in Canada. Because as we can see on the website of View, they are going to install quite a lot of smart glass in Canada, in the greater Toronto area. And we can see that they are going to have a 300,000 square foot luxury multifamily project right over there. So that's going to be quite a lot of smart glass. And this project is expected to be completed in Q2 of next year, 2022. And the tenants of the building are likely going to occupy the building in Q3 of next year. Then a little bit of financial analysis, and we might get an update on these financials in a few weeks' time, in about 1 month's time. I believe, according to TradingView at least, they're going to have an earnings call on September 1st. Now, this has not been confirmed by View just yet, so we might just need to wait and see until we get a confirmation from View that we're actually going to have an earnings call on September 1st. If we then take a look at the current metrics for View, we can see that View in my list right now has a market cap of about $1.4 billion. They, of course, have an expected annual revenue for 2021 of $75 million. So that is going to give them a price to sales ratio of 18.4. But also keep in mind they have quite a lot of cash on their balance sheet. According to the previous earnings call about the first quarter of this year of 2021, they currently are sitting on $506 million in cash on their balance sheet, which is quite a lot if you consider that the market cap is, well, only $1.4 billion. So then the enterprise value, if you take the market cap and subtract the amount of cash, the enterprise value right now is about $873 million, and that gives you an enterprise to sales ratio. So basically the enterprise value divided by the amount of revenue for 2021, that is going to be an enterprise value to sales ratio of 11.6 right now, which definitely is not very expensive right now. And then some technical analysis. Let's very first talk a little bit about the support and resistance. First of all, the support level, we seem to be trading around $6 per share right now, which is basically from the previous low. We created a nice little low on May 13th, more or less, around that same level of $6 per share. And now we seem to be trading again around that same level of support. So let's see if that area of $6 per share is going to hold up or not. Now, if we do hold up, I think there is some resistance to be spoken about too. If we are going to trade back to the upside, I do think there are several points of resistance. First of all, the blue box of resistance right over here, which is mainly created by this low over here, some price action over here, and this low over here, but also some price action over here. And that level is between $6.80 and also $7. So I think that might be an important level of resistance in the future. We can also see that the 55 exponential moving average, which is this white line over here, is coming in hot quite heavily. We are seeing that it's currently trading around $7.25, but it is of course going to start downtrending more and more. It's likely going to be touching this blue box of resistance at some point in the future, within a few weeks, potentially next week already. And we can also see that the these green bands over here, these are the Bollinger Bands. We can see that currently the upper side of the Bollinger Bands is trading around $7.20. So I believe that blue box of resistance, I believe that 55 exponential moving average and the upper side of the Bollinger Bands, those are going to provide some kind of resistance between, well, entirely the region would be between $6.80 and more or less $7.20. If we then look at some indicators, the RSI, the Relative Strength Index, we can see that the RSI seems to be in an uptrend right now. It is making higher lows and higher highs at the same time. We also see some slight bullish divergence. Bullish divergence meaning that the indicator, in this case the RSI, is going to the upside. So right here it is making higher lows, whereas the price action is making lower lows instead. So the indicator, of course, is going to the upside. The price action is going to the downside, which is bullish divergence, which is a good sign overall. And if we go back to the RSI, we can also see that the RSI, which is this blue line over here, is now starting to trade a little bit more above the exponential moving average on the RSI, which is this white line over here. And usually when you have the blue line trading above the white line, when you have the RSI trading above the EMA on the RSI, that is usually a pretty good sign as well. And then the last indicator I'm going to talk about is the MACD. Currently we see that the MACD, which is this blue line over here, has been crossing this orange line over here, which is the so-called signal line. And usually, just like the RSI, when the blue line is above the orange line, when the MACD is above the signal line, that is usually a pretty good sign. So right now we did have a fresh cross of the MACD back above the signal line. And we can also see, if we look at the histogram over here, which are these bars over here, these vertical bars, we can see that this is also in an uptrend, just like the RSI has been, just like we saw a minute ago, more or less. We can see that it made a low over here, a higher low over here, and it is now seemingly making a higher low again. So if you think back about that bullish divergence, this is also bullish divergence. The histogram on the MACD is making higher lows, whereas the price action is making lower lows, bullish divergence, which is a good sign. So if you want my opinion about the current price action for View, about the fundamentals, about the financials and the technical analysis, and of course this is not financial advice, but of course it does look like the fundamentals are good. They have more and more projects coming in right now. The price to sales ratio and especially the enterprise value to sales ratio are pretty good. They have lots of cash on their balance sheet right now, but do keep in mind View is a company with very high operating costs, which hopefully is going to come down in the next couple of years. But this is one of the biggest disadvantages for View in my personal opinion right now. With regards to the technical analysis does seem to indicate that we might see a bottom pretty soon. In my opinion, within a few weeks or potentially a month or so, we are likely going to be trading higher than where we are right now. If I would have to put a percentage to that, I would say that it is about 75% likely that we're going to be trading higher than where we are right now, and about 25% likelihood that we're going to actually be trading lower than where we are right now, because the stock can always go lower. So in this short video, I already talked about one negative argument for View, but if you want more bearish arguments for this company, then definitely check out this video, which I created a few months ago. But if you have already viewed this video, then maybe check out my mission at my roadmap right over here, where I explain what I'm going to be doing in the next couple of years and the next couple of decades even. And with that being said, thank you very much for taking the time to watch this video, and I hope to see you in the next one. Bye bye!